Okay, everyone, David Guy here, Friday morning at 1:13 a.m. I should be sleeping, but I'm launching my business here. The official launch will be Wednesday by 5 p.m., so I have a lot to do. With that said, I will be going to bed in about 10 minutes because, I do need to get up at 6:30, or actually at 6 or, 5:45 or 6 o'clock so I can be ready for the market open at 6:30. Anyways, I wanted to tell you a little bit about the VIX. The VIX is the volatility index. It tells us how much fear is in the market based on what's happening on the trading on the S&P 500 stock market, so on that particular index. So what we see here is the range of what it's been in for. Right here we have 1 year. We can go back to 5 years. And we can see we've been at some lows here for a long time, and when the volatility is low, the market is up. And so when it starts spiking up, to above 25, that's kind of one key level right there. Then in this bull market, we should expect a significant correction in the market, perhaps even a market crash where we lose 50% of the value or somewhere in that range, like we have many times in the past. So anyways, I hope you enjoy this video. It's just to give you a quick idea of how volatility works. Right now we're in a low volatility environment. We're still at these lows, but based on where we're at last week and then this week, I do expect that we may have a pickup in volatility in the next week or so. But today it backed off, and it looks like we're going to back off a little bit more down to these lows. So we probably should expect the market to move up a little bit more tomorrow. I wouldn't expect it to go too much beyond the 2120, 2125 area if it even gets there. Just because, that's been some significant resistance for the last 6 months. And if you saw the last video, on the futures and that those charts that I showed, then you'll have an understanding exactly what I mean. If you haven't listened to that one, go back, listen to that. Pause, record, re-listen, whatever you have to do to just have a basic understanding. I'm not a rocket scientist. You don't have to be a rocket scientist to protect your assets or to make serious money in the market. What you do have to have is either the information you need and be able to, make trades, with that information in a paper trading account first, because you want to practice on it. And then later talk to your broker, maybe do it in a real money account. So I'm not an investment advisor, nor am I a broker dealer, and I don't want to be. I have been a financial consultant with Smith Barney and Prudential Securities in the past. But I got out of that business in 2001 because of the tech bubble and the crash that the market had. And anyways, I went a little more in depth into some of the previous videos about that. So you can just go back, refer to the other videos, and watch those. I think you'll hopefully pick up a little bit of information. And, my theme throughout each video that I'm doing right now is real simple. It's time to get ready. We're going to have a market correction. Or we're going to have a market crash. I don't know which. A market correction typically is up to 20%. A crash is when we go above 20%, and then once above 20%, down 20%, we're in basically a bear market. So we are in a long-term uptrend still, but at the same time we are in a 6-month sideways trend, intermediate-term trend. So, if we stay like this for the next 4 months and start pulling back even lower, we're going to officially have that long-term downtrend in place. So, none of us has a crystal ball, but I can just tell you this, that all of my indicators, from my alert system, which dates back to 1928, show that now is the time where we want to be cautious and, put ourselves in a position to buy insurance on our stock market type investments. That way when our retirements get cut in half, like they did back in 2007 to 2009, then we'll be able to make enough money or close to it, hopefully, maybe more, maybe a little bit less, than what we lose on the retirement accounts, by buying insurance. And when I say buying insurance, I simply mean buying a different type of security to hedge your portfolio. That's what the smart investors on Wall Street do. That's what you should do too. I tell people this, it's real simple. Buy and hold is really buy and lose. Warren Buffett has two rules that are famous. I know he has all kinds of rules. I know I have a lot for my own business, and I know that anyone with his success has a lot of different rules. But two famous rules are rule number 1, don't lose money. Rule number 2, you may already know this, don't forget rule number 1. Well, I'm here to tell you that when you have $1 million in your retirement accounts or stock market type accounts, or $100,000 or $10,000, or whatever the case might be in your situation, to watch those assets get cut in half is a big mistake. Why would anyone, if you really think about this logically, why would anyone who has $10,000, that they've accumulated in a retirement, stock market type, trading vehicle, which is going to get cut in half when the market corrects or crashes? No one in their right mind would do it. I mean, the smart money on Wall Street, they don't do it. But the retail investor, that's what they do. And they do that because that's what they're told to do by Wall Street. So it's time to start listening to the right sources. It's time to educate yourself to the extent, at the minimum, that you can, understand how you should be managing your money. Unfortunately, it's sad but true, you can't really rely on, financial consultants, at least not for the most part. That's not a knock on financial consultants in any way whatsoever. It's just that I was a financial broker with Smith Barney and Prudential Securities, and I know that when I went to Hartford, Connecticut for 4 weeks back in 1993, actually 1994, and then spent a day down at the Smith Barney headquarters. What I can tell you is they don't talk about what I'm talking about. They don't talk about technical analysis, and you need to be careful about who you listen to. You really should be listening to to your broker, like I said, who's licensed. But at the same time, you should have a plan for controlling how much you're willing to lose in your account, because the broker's typically not able to do that for you. With that said, there are some financial consultants or financial planners that may have expertise in technical analysis, but I have yet to meet one here locally. So in any event, my hope is that you have all the success you want in the stock market, and from a financial standpoint. Money's not everything, but the truth is, we all know the more money you have, the better lifestyle you can live, and the more you can enjoy your family. And then for me especially, it's important because I want to give back to the community. And so I mentioned this on some previous videos. 5% of all proceeds will be given away to charities. So when somebody subscribes to a membership on our website, automatically 5% of that monthly subscription fee will go directly to charity. And for those who match us that 5% and decide to go above that, we'll go all the way up to 10% as a match. It's our way of giving back. This isn't about it's not about us, it's about you. It's about helping as many people as possible, regardless of what the circumstances might be. So that's what we're about, and I look forward to the opportunity to be of service. Do your due diligence, just keep an open mind. That's what successful people do. And watch the first video. If you're watching this one, maybe you've already watched the others. If you haven't, go back and watch the other videos. But just keep watching one until you get to a point where you think, hey, this is a waste of time. I don't think you're going to get there anytime soon. And I don't just say that because, we're providing trade information and, market correction alerts, but I say that because we have other opportunities, which will be gone over in the next video, which is on affiliate marketing. And, to sum it up in the nutshell, for those who refer people to us, just send our link out and, mention us to their friends and family. Those friends and family who actually enroll in a membership and sign up for the month-to-month membership, which can be canceled at any time, or buy one of our products or services, the person who's the affiliate, which in this case might be you, would earn 50% of all product sales each and every month for the life of that customer. So, you know, if you want to make 10 grand a month, 15, 20 grand a month, this is a business to do it in. We're in a growing industry. Technology has revolutionized trading, and some people have closed minds about the markets and how they work, but, you know, that's only to their own detriment. You know, a lot of people either stay out of the market because they're afraid of it, or if they're in it, they listen to their broker and ride the assets all the way down, and then it takes them probably 4 or 5 times as long to get back to break even. And then there are those also who, you know, they give up and they never get back in and they take a huge loss. So none of those are good situations. The only good situation, the only right way to handle your money is to invest in the market. There's a lot of opportunity there. I've been in other businesses, and quite frankly, I think it's the best. I've never been in a business before where a person could accomplish so much with just a little bit of technology and the right tools. So in any event, God bless, and stay tuned. Watch that next video. Have a great day, Friday, and a wonderful weekend. Thank you so much.